Hello everyone, it's Andrew Perkins from Perkins Associates. At the time of this recording, April 26, we are only one day away from finally being able to apply for the Canada Emergency Wage Subsidy. This is the 75% wage subsidy that was announced by the federal government towards the end of March and has been much talked about since. It's quite a complicated wage subsidy to apply for, with a number of calculations that need to be made, which, depending on your organization, can be quite complex. As a result, to try to ease the burden on our clients, we created a calculator and have released it to our clients. Now, Prime Minister Trudeau has also asked that businesses do their part to step up and help wherever possible. So as a part of that, we have decided to make this calculator free for anybody who wants it. And a link to the calculator can be found at our website and in the description below this video. Now, since the video is free, we do ask that if you could just give this video a nice big thumbs up, comment, subscribe. It will help others find the video and the calculator, which we hope will make everybody's life a lot easier in determining whether or not or how they can go about and applying for the subsidy. Now, before we get into it, just a little bit of housekeeping. First, if you do notice any bugs, we're not professional programmers, but if you do notice any bugs, please let us know. If you're having trouble with calculating based off of this calculator, it's likely that others will as well. So if we can fix that, you can also help out anybody else out there who's struggling. Also, in the examples that we're going to be running through, the software we're going to be using for the accounting data is going to be Sage 50. We use that simply because that's what most of our clients use. However, if you're using QuickBooks or any other accounting software, the process is more or less going to be the same. So just please don't get too hung up as to what we're using to extract the accounting data. At the end of the day, it's the calculator that matters. So let's get into it. So what you see here on your screen is the introduction page to our calculator. The calculator has broken up into a number of tabs. The first is some instructions and disclaimer. We've got a summary tab, a revenue test tab, which will help you determine whether or not you actually qualify for the subsidy. Employee listing, where you're going to put in some raw data about each one of your employees. And then tabs for each of the qualifying periods for the subsidy. So the very first thing you're going to need to do is enter your company name. So here we see version 2.0 of our wage subsidy calculator. The calculator is broken down with a number of tabs, which you'll see below. The first is an instruction and disclaimer tab. The second is a summary tab, which provides information based off of all the information and data you enter into the following tabs, which you can use to help complete your application with CRA. Second is a revenue test tab, which is going to assist you in determining whether or not you qualify. Then we have an employee listing tab where you're going to put the raw data from your accounting system about your employees, including their names, their baseline remuneration, and whether or not they're arm's length, their hire dates, that sort of thing. After that, we have tabs for each of the qualifying periods. But before we get into filling out that, the first thing we're going to want to do is we're going to need to enter our company name. So in this situation, we're using a fictitious lobster fishing company called A101 Lobster Co. So we're going to enter that here. And that will carry out through the rest of the calculator. You'll notice down below that there is a legend here. Anywhere where you see this yellow is a field that you may be modified. Anything that's in this blue is a field that is automatically calculated, so you should see data populate there at some point. I won't go over these general instructions, but you can do so as well because we're going to be walking through them step by step here. I do just want to highlight the disclaimer. This is a calculator we have made available for free. If you are going to use this, you are agreeing to the terms and conditions of this calculator that essentially White Perkins Associates Chartered Professional Accountants Inc. does not take responsibility for any liability that may result as a result of using this calculator. So please be aware that you are responsible for the data that you put in and the information that you upload to CRA. You are also responsible for ensuring that you double check the calculations, that you're getting a result that you would have otherwise expected. So first we're going to skip the summary tab because that is just a tab that will, a sheet that will give you the information that you're going to be providing to CRA. So we're just going to skip right ahead to the revenue test. This is going to be important as it's going to determine whether or not we need to be completing the rest of the worksheet. So the first thing we're going to want to do is just enter some basic information. We're going to want to record what our revenues were for January and February 2020, our revenues for our months in 2019, and a revenue for the months in 2020. Now, the reason why we do this is under the wage subsidy, entities will qualify for it if they meet certain revenue tests. So those revenue tests are if you have a decrease in revenue of 15% for the month of March and 30% for all following months. So what's a drop in revenue? Well, the comparison is you will take the month that you're in. So we're going to be using an example of March 2020, and you can compare it to either March 2019, or you can choose to compare it to the average revenues from January 2020 or February 2020. It is your choice. Now, it is important that in making that choice, you think long and hard and consider what your future is going to look like. Because once you've made that choice, you're going to be stuck with it for the remainder of the program. Now, we've been providing advice to clients that if they have sufficient cash reserves available, that you withhold applying as long as you possibly can. The reason for this is that you'll then have the benefit of hindsight. If you can say hold off until August or September to make your application, you'll then have 3 or 4 months that the program is extended behind you to then determine whether or not using either the average of January and February for 2020 revenue or the same month prior period will give you the optimal results and maximize the subsidy that you can claim. The other thing you will want to keep in mind with this calculator is that this is assuming that we are using the accrual method of accounting, which is probably your regular form of accounting. That's where you will have receivables and payables. You'll record your revenue probably either when you sell goods or perform a service. Now, you do have the option under the wage subsidy of choosing to record your revenue using the cash method. Cash method is simply based off of whether or not you've been able to collect. You might choose the cash method if you have maybe a lot of sales, say, for example, in the month of March, but because of COVID-19 and the downturn, your collection was quite poor. So by opting to use that cash method, you may find yourself able to qualify in a month you otherwise wouldn't have. Now, again, like with the option of choosing the prior period method, you are going to want to carefully consider your choice, because once you make that choice, you are going to be stuck with it for the remainder of the program. So again, if cash reserves are sufficient or you have good cash flow, you may want to consider holding off as long as possible and making the application so you can use the benefit of hindsight to maximize a potential claim. So now we'll hop right into this and start completing the calculator. So the first thing you're going to want to do is pull up your accounting software and take a look at your financial statements for the periods in question. So what we're going to want to enter first is our January and February 2020 sales. So here in Sage 50, I'm just going to be using a comparative income statement so I can pull up both periods at the same time, January 1st to January 31st and February 1st to February 29th. I'm going to hit OK. And there we can see our sales for those 2 months. So we'll enter our January sales here, 109,484, and our February sales of 17,708. And we see that we get an average sales for the month of March, or sorry, for January and February of 63,596. So now we're going to want to go ahead and take a look at what our March sales were. And we'll see here that we had sales of 16,990 for the month of March 2020. And again, we're going to want to repeat this process for the prior year to determine what our drop in sales were for March 2019. So we see that the sales for March 2019 were 20,105. So what do we have? We have a drop in revenue in March 2020 compared to the average of January and February 2020 of 73%. So remember, in March, you only need a decline of 30%. In comparing it to the prior period, we have a drop of only 15%, but it does meet the threshold. So our calculator is telling us, is the threshold met? Yes, it's met for both. So you can choose either option. Is it eligible based on the reference period chosen? We have no, and the reason is because up here, we have not yet chosen a prior period reference period. So this is where we're going to have to make the crucial decision. In this case, we are going to choose same month 2019 because in all likelihood, this client will continue to see a decline in the revenues throughout the remaining 3 periods. So we're going to go ahead and choose that. So you'll see that that changes the results in the calculation below. Are you eligible based on the reference period chosen? Yes, we are, because we've declined 15%. So can an application be made? Yes, it can. So you'll see that even without entering our April and May, that it does actually give us an answer for April as to whether or not you qualify. Has it met the threshold? It's telling us yes, because we don't actually have any data in here yet. But is it eligible based on the reference period chosen? And do you qualify? In this case, it's saying yes, it qualifies because the prior month qualifies. So let's just say, for example, let's pretend that we had in April 2019, there was $25,000 in sales. And in April 2020, we had, say, $24,000 in sales. So you'll see that in this case, there's only a 4% decline in the revenue. So is the threshold met? Yes, but only based off of the decline compared to January and February. Is it eligible based on the reference period chosen? No, it's not, because again, we're comparing to the same month of the prior year. But can we make an application? Yes, we can, because we qualify the prior month. Remember, there is a rule under the CEWS that if you clear the hurdle in 1 month, say for example March, you automatically qualify for the next. However, you do have to reapply the following month. So in this case, we've got a situation where they didn't meet that April hurdle, but they still can complete an application because they qualified in March. So let's say in May, we had $30,000 in revenue, and they only made $21,000 in sales. In this case, they have a decline that meets both criteria. Are we eligible based off of the reference period chosen? Yes. And can an application be made? Yes, because they've met. Now, we'll just quickly change some of these numbers to kind of highlight the fact why you might want to use some hindsight. Again, we've chosen the same month prior period. We already know in April that they don't qualify. or they don't meet the hurdle, but they do qualify only because of the prior month. Now, May, under this example, they are qualifying simply because they met the 30% threshold. But let's say they didn't. Let's say they had $27,000 in sales. Suddenly the decline of revenue in May 2020 compared to May 2019 is only 10%. So they are not qualified, they're not eligible based on the criteria chosen, and they cannot make an application. So if you were sitting here in June or July and hadn't made your application at this point, you could then use the benefit of hindsight to be able to look back and say, oh, well, if we choose January and February 2020, then yes, we actually qualify for all those months and can make applications. So the revenue section of this is fairly straightforward. The main thing, again, is that you're just taking your time, if at all possible, prior to making an application, so you can make the best choice possible for your organization to maximize the subsidy. But now that we have that in, what we're going to do is we're going to move on to the employee listing. So the employee listing section of the calculator is one of the more complex ones. It is where we are going to enter some crucial information about the organization for the baseline remuneration. So the baseline remuneration is an important concept under the section of the Act that was introduced to calculate the subsidy, because there is variances as to how the calculation works depending if you're arm's length or non-arm's length, and depending if you've had a reduction in your salary, all based off of this concept of baseline remuneration. At the heart of what a baseline remuneration is, essentially it is what you received for the work that you did between January 1st and March 15th. Now, it's important to know that that is not the amount that you were paid during that period. It's the amount that you were paid for the work that you did. So there are some cutoff issues you do need to consider. So for example, if you had a payday that began in 2019 and ended in 2020, and there was a split in your work days, you're going to have to prorate the amount that your employees were paid that fell into 2020. Same thing back onto that March 15th cutoff. If you had a pay period that was beginning in early March and ended after March 15th, you're going to need to prorate that based off the days off of the work done by each employee, not necessarily when they were paid. So we're going to, keeping that in mind, we're going to run through an example here with our client, A101 Lobster. So what we're going to do is we're first going to pull up our employee information. So you can do that in Sage 50 by going to Reports, Payroll, Employee. We see we've got our listing of employees here. Now the first thing we're going to want to do is just get a general listing of who worked during this period so we can enter them in. So we'll just do, you can pick any dates that you can know will pick people up, or if you happen to just know all of your employees, you can maybe skip this step and just type them in. In this case, we're going to pretend that we don't know who they are. So we're going to enter January 1st, 2020, and we'll use April 15th, 2020. So we've got our listing of all of our employees and all of their pays during that period. So the first thing we're going to do is we're just going to go about and enter the names of each employee as they appear on the payroll report. Now, the next thing we're going to want to do is determine whether or not each of these employees are arm's length to the organization. So in our situation here, we're going to say that A101 Lobster Co. is owned by this individual, Walter. So an arm's length employee, what is that? Now, Generally, it's considered somebody that is related to a shareholder or director or somebody with significant influence over the organization or can control the organization. So if Walter is the sole shareholder of A101 Lobster Co., generally we would consider a non-arm's length individual to be Walter's spouse or common law spouse, their children, grandchildren, parents, grandparents, and siblings. It also includes the in-laws, so Skylar's brothers or sisters would be considered related to Walter. Now, what it does not include is nieces and nephews, aunts and uncles. So it's kind of up and down two generations, and you can kind of go left and right with your siblings and your in-laws. So in this case, our first person here, Jesse, arm's length, he is. Jimmy, he's also arm's length. Skylar is the common law spouse of Walter, so no. And Walter is the shareholder, so he does not deal at arm's length. Next is we're going to answer the question, was the employee hired after December 31st, 2019? This is important because your baseline calculation will be affected if you weren't employed throughout the entire period of January 1st to March 15th. So in the example that we're going to be using here, Jesse, we can see that he had pays in December. Skylar had pays in December. Walter was the shareholder, so they were all hired before January 1st, 2020. So we're going to answer no to this question. Now, Jimmy, his first pay period was starting January 26th. So for the purposes of this example, we're going to pretend that Jimmy was hired on January 26th. So next, if hire date, or if yes, we got to enter their hire date. So you're just going to do this in a month, day, year format. So we'll say he was hired January 26th, 2020. So there we've got the kind of the base information in for all of our employees. Now we want to start looking at their actual pays during the period to help us prorate and determine this baseline. So the way the calculator works is what we're going to do is first enter in what was the first pay period of the January 1st to March 31st period that ended after December 31st, 2019. So again, you're looking for a pay period that ended after that date, not necessarily when it was paid. So if you had a paycheck that went out January 2nd, but for a period ending December 31st, that would not fall in here. You'd be looking for your pay period that began January 1st and ended at whenever the subsequent period was. In the case we're using here, the first pay period that we have ending is January 4th. So that's going to be our pay period, or December 29th to January 4th. So we're going to go ahead and enter those dates. So we see it calculates that there were 7 days in that pay. 3 of them fell outside of the baseline period. Now we're going to do the same procedure again for the opposite of for when the period ended. So we're going to enter the final pay beginning before March 15th. So again, this is where it's going to come down to the days that are covered under the pay period, not the dates of the check. So if we look at some of our examples here, we will see that for us, we've got Skylar. We can pull that pay period up quite easily because she was paid from March 11th to March 17th. Now, one thing you want to keep in mind is that with your organization, that when you're entering these pay dates, these are for your organization as a whole, not on an individual level. So you are going to need to make sure that you have set pay periods for your organization. The reason why you don't necessarily see everybody getting paid on this date here is because something that's unique to our area in southwest Nova Scotia with lobster fishers is sometimes you have people bouncing in and off of crews on boats. Some people get paid 1 week and then they're not there the next week, and that's the case here. But when we enter those final dates, we see that, again, it's a 1 week pay period. So we have 7 days that are in the pay period and 3 that are going to fall outside of the baseline. So our next step is we want to complete the actual pay period information from January 1st to March 15th. So the way this is broken out is we're going to enter our first pay period here for each employee, our last pay period for each employee, and then we're going to enter the total amount that they were paid otherwise. So in our situation here, we know our pay periods run from December 29th to January 4th. So that's what we're going to modify our report here to be, from 12/29/19 to 01/04/20. And we see that we only have 2 people that got paid during this period. Jesse was paid $1,000. Skylar was paid $2,500. We're now going to repeat the process for our final pay period. And actually, one thing you're going to want to do is because you may have check dates that are different than the pay period, and Sage 50 is going to report based off of your check dates, you're going to want to pick a couple of days kind of on either side of your pay period so you can make sure that you pick up all of your checks. In this case, in this example, everybody's being paid on the same day as the final at the end of the pay period, which again is typical in this industry. But just to show you as an example, I'll put March 2nd and let's say March 21st. So again, we're looking for anything that was paid for people that worked between March 11th and March 17th. So Skylar does not fall into that. Jesse does not fall into that. But our new hire, Jimmy, does. He did work that period. So we're going to put $1,000 under Jimmy. So next, what we need to do is repeat this process to catch all remaining pays. So you could do this kind of one of 2 ways. You could do a bit of algebra. You could run a report for the entire period and then enter in a formula that types in that number. And then let's say, for example, if Jesse got paid $20,000 during that period, you could do that. However, we'll try to keep it simple, and we will look for pays from January 5th, 2020 through March 11th, 2020. Here's what we come up with. So we see during this time, Jesse was paid $26,000. Jimmy was paid $2,000. Skylar was paid $23,000. And Walter took one paycheck of $13,078.10. So there we have a calculation of what our baseline is. But we are missing one important step. The definition under the Act for baseline remuneration does allow you can make the choice, it does allow you to adjust somebody's baseline pay based off of time they've taken without pay if it's for 7 consecutive days or more. So if you've had somebody that took some unpaid vacation, maybe they needed some personal time off for whatever reason, they had a death in their family, they needed to care for somebody, whatever the case may be, you can choose, if that period was 7 days or more, to enter it in this days unpaid leave section. Now, why would you do that? Well, the answer is because it will increase the baseline weekly pay that they're getting, which will in all likelihood actually increase your subsidy. So how do you determine whether or not they were that they had unpaid leave? Well, hopefully you have some documentation. That's a big first step. The second thing is you can look through your payroll records and try to determine. So that's what we're going to do here. So if we look at the dates that Jesse was paid, he had a pay that went from January 5th to 11th, 12th to 18th, 19th to 25th, 25th to the 31st, and then the 9th to the 15th. So he's gone some time there where he has been paid. So he's gone between February 1st and February 8th with no pay. So we can enter that in. So he's gone at least 8 days without pay. But if we keep going through, we see that he then also went between the 15th and the 27th without being paid. That's another period of 11 days. And then if you see here, he didn't have a last pay period, so we know he wasn't paid at all until the 15th. So he went from the 4th to the 14th with no pay. So that is another period of 10 days. So in total, we have 29 days where Jesse went without remuneration. So before I hit enter, we can see the change of the calculation. Before, his weekly baseline pay is $2,500. But when we factor in those 29 days unpaid, it's increased his baseline remuneration to $4,133 per week. So significant difference there. Where you'll really see a difference, or one that will make a difference in the calculation, is with Jimmy here, because he's starting off at $376 as an average. But if we look up here, we remember that he was hired on the 26th, so his first pay period was the 26th to the 31st. But then he didn't work again until the 23rd to 29th pay period. So he's gone February 1st to February 22nd with no work. So that's a period of 22 consecutive days with unpaid leave. He then worked the 23rd to the 29th, and then he did have a closing pay period that started on the 11th. So he went March 1st through March 10th with no pay. So that's an additional 10 days. So that gives us 32 days of unpaid leave for Jimmy. So you can see that increases his baseline to $1,058. And considering one of the criteria in the calculation to determine the subsidy is 75% of the baseline, it's a significant difference if that's the kind of bracket that Jimmy falls under. 75% of $1,058 is significantly more than $367. So you can see that you probably will want to do the legwork here to put this in. In all honesty, for somebody like Jesse or Skylar, who's getting paid more than that 1,100, there's a threshold of $1,129 that if they're being paid more than that, you probably don't need to do the legwork, as there is a 75% of that $1,129 is the $847 maximum that you can either otherwise claim for an employee during that period. However, it is something that is worthwhile to do, and this is a useful exercise for posterity here. So we will complete it for Skylar. So Skylar, she worked the 5th to the 11th, 12th to 18th, 19th to 25th, 26th to the 31st. She got another pay for the 26th to the 31st, so she received some sort of bonus there. But then she went from February 1st to the 15th without pay. So we've got 15 days unpaid there. She worked from the 16th to the 22nd, but then had nothing from the 23rd to March 4th. Now, we'll see here in this worksheet here that actually there must have been some sort of an adjustment to her pay at some point. So you can see that she's, as the next pay period's kind of fallen under this one. So you can see that she was paid from the 16th to the 22nd of February. And then the next period she was paid for was the 26th to March 3rd. So she's gone only 4 days without pay. So remember, the criteria is 7 days or more that are consecutive. You can factor in this calculation. So we don't get to include that. So then she's then gone from March 4th to March 11th, or sorry, March 10th with receiving her pay. So she only gets 15 days under there. Finally, we have Walt. He only worked one pay period. So this is going to be a example that'll show you how this proration works. So he received one pay of $13,000, but this is calculating a baseline pay of $1,237. Well, that doesn't make sense if that was his one pay period, because obviously his weekly remuneration would be $13,000. So this is an easy one to calculate. In the period of January 1st to March 15th, there's 74 days in that period. He got paid for 7, so simple math. 74 minus 7 gets us 67 days. His baseline weekly pay is now the same as what he was actually remunerated. So now we have all the information in for our employees. We can move on to actually calculating the subsidy. The subsidy calculations are done on these 3 tabs at the bottom. These correspond to the dates prescribed in the legislation. They don't go beyond, even though this program probably will be extended. So please bear in mind that there probably will be additions to this calculator and further versions released to add to the pay periods as they are announced and prescribed by the federal government. So we're working on the period of March 15th to April 11th. So we're going to click on that tab. And this tab looks kind of daunting at first. The way that it is broken down is it has a listing of all of the employees that you've entered in the employee listing, and it brings over their baseline pay. You're going to see 5 pay periods to which you can enter in information. You're then going to see to the right 4 qualifying periods under the Canada Emergency Wage Subsidy. So the question is, why is there all this information? Well, what we wanted to do with this calculator is to try and simplify your lives as much as possible. The prescribed periods under the subsidy are 7-day periods beginning on March 15th that run from Sunday to Saturday. So if you have a pay period that runs Sunday to Saturday and is weekly, then it's quite a simple process to actually complete this CEWS application or determine eligibility, because you have no proration to do unless you have somebody that you hired midway through a week. But the reality is, for most organizations, that's not their pay period. Most organizations pay weekly, but they don't necessarily run Sunday to Saturday. They could run Thursday to Wednesday, Friday to Thursday, Saturday to Sunday, Saturday to Friday. You have biweekly pay periods that have different starting and ending dates. You have some organizations that pay once a month, some semi-monthly. A whole lot of catch-alls that don't fit nicely into this bucket that's been created by CRA. So in order to fit everything into here, if you don't, it's quite a onerous and complex calculation that CRA is laid at the feet of organizations to try and determine what their subsidy is going to be. So this portion is intended to ease that. The idea here is that you can just enter the raw data from your accounting software, which will then spill out into the qualifying periods to determine your wage subsidy automatically. This takes a lot of the legwork of your calculation, of the calculations you otherwise need to do. So what you have to do to complete is we're going to need to enter our pay periods. Now you may be asking, why do we have 5 pay periods here if there's only 4 qualifying weeks? Well, the answer for that has to do again with cutoff. If as is the case in our situation, you pay weekly, and the pay periods begin and end not on Sunday through Saturday. You're going to end up with some days in the first pay period that fall outside of the March 15th to April 11th period, and you're going to end at the beginning, and you're also going to have your last pay with a few days that spill outside of that date. So this is intended to catch all of those situations. If you pay bi-weekly, you might have 2 entries if you do Sunday to Saturday every 2 weeks, but more likely you're going to use 3 pay periods. If you pay semi-monthly, you're probably going to use 2, but there is a possibility of using 3, especially as the time goes on and the 4-week periods drag. Same thing with monthly. You're in all likelihood going to be using 2, unless you happen to have a monthly pay period that falls exactly into there. So we're going to move back to our Sage 50, and we're going to start looking at this on a pay period by pay period basis. Probably the easiest thing to do in this case is to just pick a few days prior to the period covered under the subsidy, March 15th, to a few days after April 11th, so you can catch all of your employees, and simply just do a week by week dump. So that's what we're going to do in this case. We're going to choose March 3rd, let's say March 7th, 2020, and we'll go to, let's say, April 16th, 2020. So here we can see all the pays that fall under the periods. Now, in entering it, the first thing we're going to need to do is enter our actual pay periods. So we know already that our first pay, we remember from our employee test here, our first pay is going to be March 11th, 2020 to March 18th, 2020, or sorry, March 17th, 2020. You can see it automatically will calculate the days during the period. So we're just going to keep filling out these days to record all of our pay periods. Again, using the month, day, year formatting to recording our days. And finally, we've got April 8th to April 13th, 2020. April 14th as our pay periods. So we can see here our first pay period falls outside of the wage subsidy period, which is March 15th, April 11th. This one begins March 11th, and then same thing on the closing side. This one ends on April 14th, but the actual subsidy period ends on the 11th. So this calculator is going to prorate all of that to help us get to our conclusion. So now it's just a simple data entry. So for Jesse, he only had one pay during the period. It was March 18th to the 24th. So we're just going to skip over to that pay. We're going to enter $2,000 for his gross, 101.47 for CPP, and 31.6 for EI. Now, the reason why you're going to be entering CPP and EI is going to become clear shortly. Just keep in mind that there is a possibility that you could only enter the gross, which we'll address shortly. So for Jimmy, his first pay was in the first period, $1,000, $48.97 and $15.80. He receives pay the next period. Now, interestingly, we see that his pay has been reduced. It's been reduced to 75% of what he was receiving before. And the reason for this is Walter said, cash flow is a little tight. Jimmy, you're a new guy. I'm just going to tell you to stay at home beginning on March 18th, and I'm going to pay you 75% of your wage, and you can just stay at home and continue to collect a check. That's going to be important information for later. We'll notice that Skylar is actually the same thing. She was receiving $1,000 as well, but beginning in March, on March 18th, she started receiving less. But she actually remained on the payroll, unlike Jimmy, who actually fell off on the 4th pay period. And we see that Walter's actually decided to throw himself on payroll, giving himself 1,129, which is actually a magic number because he's trying to take advantage and maximize his wage subsidy. Keep in mind that the maximum that you can actually be paid is from the subsidy is $847 per employee. So clearly Walter is trying to take advantage of the wage subsidy to the best of his ability. You can see here I actually made a data entry error. Just keep in mind that you got your dates right. He didn't go on payroll till March 18th. An error entered on March 11th, so we'll just remove that and move over to the appropriate dates. There. So we now have everybody's payroll data entered. And what you'll see is on the right-hand side, we now have subsidies being calculated. There are still a few columns here that you can enter. Under each wage subsidy period, you have the ability to indicate, was this person on leave? Yes or no. We already said that Skylar and Jimmy were put on leave. This is important. The reason being is there is an adjustment that is in the Act that will allow you to claim EI and CPP expense back from the government if you've told an employee to stay at home with pay. If they do any work for you at all during that 7-day period, then they are not on leave with pay, and you cannot claim their CPP and EI. So that's an important thing to keep in mind for the periods that they're following in. So in this first period, in this period here that Jesse worked, he worked this period, so he was not on leave. And you'll see for Jesse that it's splitting up his one pay that fell nicely into this week. He gets a subsidy. A company qualifies for a subsidy for both periods. And interestingly, because his pay falls into his 1 week pay is split over 2 periods, he was paid $2,000. The company actually gets $847 for his pay twice, effectively improving the subsidy that he otherwise would have gotten. Now, for Jimmy, he went on leave on the 18th. But that meant he worked through the 17th. So in this first period, he was not on leave. But from the 22nd to the 28th, that's after the 18th, he was on leave. And we'll see here as we enter yes to this, his subsidy has gone up. See the effect of the change in the subsidy? Because the calculator is picking up his EI and CPP expense. Skylar, same thing. She went on leave beginning the 18th. So she worked during this period because she got paid up through for work through the 17th. So no. Yes. Yes. And yes. Walter always works the business, so he's not on leave at any point in time. And we'll see that that caps the subsidy at $847. If you were to have been on leave, you can see here where that will actually allow for a greater subsidy to be taken. and adds the $55.74, the employer portion of the CPP expense. So that's the calculation of the subsidy for the qualifying period of March 15th to April 11th. Now, one thing you might want to keep in mind is to the right-hand side of the calculator, there is a check in place. And what this is designed to do is basically recreate the calculations for anything that would fall outside of the qualifying period. So if you were to add up this and then the gross pay for each period, we see that for Walter, it's $4,516, indicated by the sum at the bottom, which is the same that we have in our report here. So this is just to serve as a check that the calculator is picking up all the information you've put in. There is a further check here that actually adds all those together and then compares to the data that you entered, and it should all be 0. If ever you do not see a 0, there is an error, probably with the dates here. So now that we've got the data entered for a subsidy, we can go and check on our summary tab. So the summary tab is just designed to kind of pull the information and give everything that you need in a nice simple package that you can then report to CRA on any one of the portals, either through My Business Account, Represent a Client, or through the other portal that CRA promises to make available beginning April 27th. What it shows us here is that from March 15th to April 11th, the entity qualified for that period. They had 4 eligible employees, paid a total gross payroll of $11,425, and there was a wage subsidy of $10,388.26. Now, there are 2 different adjustments that can be made here. So if A101 Lobster Co. had gone ahead and applied for the 10% wage subsidy, that does adjust the calculation, and we would need to make an appropriate adjustment here. So say, for example, if they had applied for the 10% wage subsidy and for the month of March, and it was, just for argument's sake here, $1,000, you would put $1,000 in, and it reduces the net subsidy that the entity can anticipate receiving otherwise. The other adjustment that you need to consider is that if you have any employees that are on the EI Work Share benefit, and that program allows employees to who have reduced hours to share their job with another employee and go on employment insurance. So that way they are still working, receiving employment insurance, and getting checks both from Service Canada, from EI, and from their employer, hopefully maintaining a similar level of income during this downturn, but without being fully laid off and without hopefully hampering the employer. But if anybody does receive benefits under that program, if there was a work sharing program, you would need to enter those amounts here. So we'll use an example here. We'll say it's another $1,500 that somebody received for those benefits. Just for argument's sake, you'll see it reduces the subsidy further. So that's basically it for our calculator. Hope that you found this useful. If you did, please again leave a nice big thumbs up on the down below, which helps people find the calculator and also this video to help them walk through the process. If you do have any problems, again, please don't hesitate to contact us. Our contact information will be included below. We'll be more than happy to help. Until then, best of luck. Hope you and your family stay safe, and thank you very much for watching.